Okay, welcome to a capital hungry breakdown of GBPUSD. So it's been about 20 days since we have done a full breakdown on GBPUSD, and it was one of the pairs that was most voted when I did the poll, of course. So we're just going to be doing a full breakdown on GBPUSD, going from the higher time frames to the intraday time frames. Of course, we will map out our key levels using some higher time frame historical points like we normally do. Look at market structure, look at how the pair is moving. As you may already know, our previous couple of analysis on GBP/USD have played out fairly accurately and very clean for the buys, as we have been continuing to run that optimistic train with risk currencies being a lot stronger than safe haven currencies. And of course, we have GBP versus the US dollar here. So overall, in the higher time frames, the US dollar has been fairly flat, as we know. And we want to note that GBP has been showing us more signs of rebounded economic data, as well as support from their respective central bank, the Bank of England, and overall more support politically, as we've seen very optimistic speeches from Boris Johnson as well. Okay, 1 second here. So we've had a lot of optimism around British economic rebound so far. And we just want to see how we can either continue to extend this, or if we have any reasonings to start seeing some potential sells, which I personally do not see any signs for sells unless we have some tensions related to Brexit, or we have some negativity around coronavirus that leads to global lockdowns, or specifically lockdowns in the UK that would cause economies to become stagnant again, and investors to start to price in a drop in economic data, as well as equities respectively in the UK would also take a hit. But let's start breaking down the chart from the higher time frames. So on the yearly here, what I've been identifying over the last few analysis is the fact that when the coronavirus first hit the markets, we had it cause that massive downside where risk currencies were extremely weak against a safe haven currency, especially being the US dollar. So we had that massive liquidity grab at new historical low points, and price started to come above previous historical lows. And we know from basic concepts, buy low, sell high for smart money, as well as we had that massive support from some global central banks and optimism start coming into the scene. I do see some potential for a repeat of some market structure similar to here, where we are now, where we have a very minimal top wick created. We've also grabbed a lot of liquidity to the downside, and I do see the potential for us to creep up and potentially fill some of this order block area and wick fill area to the upside before we have another possible downside move if we have any confirms of that lockdown, right? I really see some potential of history repeating here with what I'm seeing on the yearly chart. But the main thing I'm looking for is the potential for GBP/USD to at least create a top wick and test some of these upper candle bodies and come fill some of this upper wick range and correct more of this downside move, which just the minimum first move can run at least 250 pips to 300 pips. And if we have continued market optimism, rebounding GBP data, we maintain bullish market structure on the higher time frames as well as the intraday time frames, then we're just going to continue that run up 500, 800 pips to correct more of this downside move and fill some of this order flow to the upside. So I'm just going to start mapping out some key levels using some of the historical wick points, but mainly the candle body conjunctions, and going down the time frames from the quarterly chart to the monthly chart to see if there's anything that will contradict my bias of current market optimism or anything as per price sensitivity that might give us a little bit of struggle for buyers to break through. But let's just see what we're dealing with. Okay, so the quarterly chart is showing us a potential double bottom, very strong lower support being formed, these flat candle body conjunctions coming above the previous lows from 2017. After that liquidity grab where we already had some of this range partially filled, we're breaking above some of these candle body conjunction points to the left or are reacting there now, where we can potentially use this as a support. With what we are seeing now, it would be safest if we broke above 1.3275 area, where we had previous reaction just a bit below that when we go check the intraday ranges. Because if we break above there in these candle body conjunctions with a lot of this liquidity that was generated from the downside, plus these bullish engulfing candle plays we'll see on the monthly and weekly as well, breaking above this previous high, we have potential to correct this downside move here and take advantage of that upside play to test some overall bearish market structure, where we can take advantage of this potential 1200 pips to the upside, as we've seen these corrective points before, major melts before. And we've already had a very strong impulsive melt, especially with the previous candle hitting historical low points. And we do have market optimism still strong. Just summarizing again, stronger GBP data, weaker US dollar on the higher time frames, of course. When we look at the Dixie here on the higher time frame, such as the daily chart, still fairly bearish, even though it's reacting to some previous key low points, but still overall fairly bearish. See some nice areas of interest where price, even if it comes to test these previous candle body conjunctions, it would line up with a potential retest of that overall macro bearish trend line and that bearish market structure. And just that play to test that upside is 750, 800 pips alone. So I'm just going to go down to the monthly chart to better define some ranges for us, like I've done in other breakdowns as well. But everything is looking like as we're expecting for some continued optimism when we're looking at the market structure, some of the recent price action, and buyers in control so far. So very strong liquidity grab. We're coming to a price sensitivity area here, but I'm just going to start mapping out some zones as I'm speaking as well. But we have a very strong bullish engulfing candle that corrected the downside move after generating some liquidity and creating a support that failed to break, and the candle bodies failed to close below this previous support and intraday low here, as well as the historical lows to the left here. So this will give us some ranges to work with, at least to the upside if we get any pullbacks. What would be ideal for us, but I don't know if it's going to be high probability when we go zoom in the structure, would be a 50% correction of this overall impulsive move, but still maintain intraday bullish market structure, and then continue and have enough liquidity for the move up around 700, 800 pips as we go up into the ranges and extend and have possibilities to extend the trade. Let's just see how this last month played out through these key levels. And then this will also allow us to see how the market structure is looking. So some of these ranges are tight, but they're tight for a reason. But even the tightest ranges are still like 30 pips. Sorry, I'm just going to round these off first just to make it easier for myself. A lot of these key levels will be fairly similar to previous map levels, probably just off by maybe 10 or 20 pips. And then I just refined a few more ranges for us to work with as well, just by covering all the candle body conjunction points. Okay, so some nice key levels for us to use as guides alongside market structure. We can see from the last previous peak high point, we've had about a 370 pip extension and an impulsive move. Also from the last point, we had a bit of consolidation and liquidity generated in this area. You can see that very similar to Euro USD, buyers are failing to break previous highs, but also not breaking bullish market structure. We're still remaining in bullish market structure from an intraday perspective. So I want to look at the daily. Yeah, daily is not, even though you have this bearish candle, it is not breaking market structure. A few liquidity grabs respecting 1.303 level. Just from this point. What I was going to say is from this extension point where we had this last previous area of consolidation around the last previous intraday high that was broken as well, where to break this high, yet you saw that price had to create this pullback to have enough buyer order flow in the market from better prices in this period of consolidation to then break into new highs, right? Overall, I'm seeing us in this bullish ascending market structure still, where we're still printing highs and failing to break previous lows, and we're also not breaking previous intraday high points. Like I'm just looking straight across here. This would be a real sell-off, would be below this area. And what I'm looking at is what I'm developing and lining up this 4-hour bullish market structure. From the peak point, if we came down from there, it'd be about a 50% correction from the impulsive move area here, like around 250 pips down, 470 pips up. So it would be ideal for GBPUSD to give us that upside from a better buy point as we're failing to break previous highs. Or if we do not get that deep pullback, as we are getting liquidity generated in this area here, but you can see that this pullback after this previous high was peaked, where we had this pullback and liquidity generated in the market, correcting this upside move. It was not enough buyers order flow to break the previous high. So we're either going to need a period of consolidation, then a potential drop to key levels to have enough buyer order flow in the market alongside continued market optimism, strong UK equities, continued UK optimism, specifically like around trade ties with the UK and US talks, UK and Euro talks, continued strong GBP data in a flat US dollar, and we can see potential for that move up from these points. But otherwise, I would look for buys above the previous high around 1.315. So let's just mark out what we're looking for. This is a strong zone, which is how we had this price grab here and then the bounce. So if we broke below this area, then I could see the potential to drop to 1.285 and retest bullish market structure from an intraday perspective and give that 50% correction of the overall impulsive move and have enough order flow in the market to extend and break the previous highs by a few ranges to the upside following key levels in the higher time frame projections. Or you can take buys above a break and retest above 1.31500. There as well. I would only see continued sells with market fear, with GBP data falling off, something to shift market sentiment. So meaning from a fundamental aspect, this is the continued optimism route when we're road mapping. This would be the market fear route, where in combination with a break of structure coming below key levels, shifting into bearish market structure, like if we start to do this and start to create bearish market structure, right? We see buyers exhausting and failing to break previous highs, of course, which will start to turn into bearish market structure. And then alongside mass market fear, UK data falling off, UK going into extended lockdowns, and a loss of that optimism. How would we notice that? Noticing safe haven currencies such as the yen, the US dollar, and getting stronger, and noticing, of course, equities falling off their highs. But otherwise, if we don't have those confirms, market optimism and smart money is always usually holding stronger. So we just want to keep that in mind. Yep. So just to summarize from our previous analysis, the higher time frames, there's nothing really contradicting our upside bias. There hasn't been any confirms of mass market fear or extended lockdowns. UK data has been holding stronger. FTSE 100 is still bullish, UK equities. We have some UK jobs data this week, which I also expect to be stronger as well, as previous UK jobs data was rebounding, as well as global jobs seem to be rebounding overall. UK GDP figures on Wednesday, but tonight we'll see some of the jobs figures, which should be fairly optimistic in my opinion. And then UK GDP, I can see the quarterly and monthly GDP starting to show signs of rebounding, but possibly the yearly still lagging behind from that massive drop that coronavirus caused in economic data. But yeah, overall, you guys understand my bias and sentiment. So I'm just going to label this chart, set out all the price level alerts up and down these main ranges here, and then we'll just be waiting for those potential setups to play out. Even the safe move post consolidation or post pullback above previous high break and retest is still 250 pips. And you only need like a 50, 100 pip trade a couple times in a month to really start compounding your growth, right? So keep that long-term vision in mind. But of course, with day-to-day volatility, you can always use these key levels, lower time frame price action, and the overall market structure and day-to-day sentiment to scalp as well, just to start developing your capital if that is something you want to do that is a part of your trading plan. Okay.